What is good, guys? It's Ray J back with another video. And in this one, I want to break down what's going on in Super Micro. I'm going to talk about why this play is very, very interesting and why this relates to Tesla, how this could actually give us a lot of lessons for Tesla if you're trying to trade it or play it, and why there's going to be some interesting moves coming in the futures of this stock, in my opinion. But before I break things down, all this information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit $500 into the account, you are guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 free stocks. This offer ends very, very soon. Anyways, now let's break down what's happening with this stock right here. So, as you guys know, and as many of you have possibly heard, Supermicro has been running like crazy. If you guys look back at the stock, it's up 171% for the year so far, and it's continuing to push and push and push on a very, very strong uptrend. Now, despite the uptrend that this thing is on, we actually had a big red day on Friday, and this is what's causing a lot of people to be interested in whether or not this thing is going to run. So, I want to just talk about the company real quick, break down some stuff about this, and then talk about why this is very relevant to Tesla, in my opinion. So first off, what is Supermicro? It's basically a global leader in high performance, high efficiency server technology and innovation. It develops and provides end-to-end green computing solutions to data center, clouding, computing, and other things like that. It's very, very good for building like applications that are used for AI development. It's very good for like all sorts of different streams of work, from anything essentially that involves computers, like even like architectural work, and the list goes on. So looking at this, you guys can see their scalable and flexible storage architecture right over here. This can be used for all sorts of different storage systems. This can be used for computing, AI development, and things like that. And with these new systems that they're developing, this is going to be very useful for storing necessary data. Don't forget the efficiency of data that is necessary for these changes that are going to be made. And then on top of this, they have a data center resource saving solution that they have developed, which is super, super useful. This is why they have partners like AMD and Intel, NVIDIA, and the list goes on. And it's very, very efficient. And it's a very efficient use of the semiconductor chips that can be used for all these different things. So you can actually use this for all sorts of stuff. You could use this for the main thing is AI development. That's what's giving this, all the hype. And then as a result of their technological innovations, we're starting to see some very, very nice earnings. That's going to be very big for them. So this is, I think, based in San Jose, California. So it's in Silicon Valley. They're using IT solutions for AI and cloud storage. And then if you look at their earnings, they had some pretty nice looking numbers. Net sales were at 3.66 billion. Not bad whatsoever. Well above what we got during the same quarter last year. Their margins are only about 15.4%, so a little bit tighter than what we got last year, but not as bad. Net income was at about $296 million versus 157 million in the first quarter. And besides that, things are looking pretty good with lots of beats. Now, we saw some headlines coming out about this a couple of weeks ago about how the shares have popped after a very nice earnings beat and very strong guidance. So you can see right here, the revenue is at 3.66 billion. That's up from 3.06 billion expected by analysts. They beat on EPS, and they also had a very strong guidance. They actually increased it from the previous numbers to about 14.3 to 14.7 billion dollars. So it's actually very, very strong looking numbers. You could see that it closed up about over 3% from back then, and since then it's been running like crazy. And we're seeing the AI hype and the squeeze potential that's really taking this over. So a nice beat on earnings, strong guidance. So you could argue there is some fundamental values that could back up this move to some extent, but there's actually a lot more to it than just that. So I also want to note that a big factor for this stock is, so it's associated with NVIDIA. Let's just talk about that real quick. It's associated with AMD and Intel. It's going to be making these computers that are going to be used for servers, for websites, data storage, and stuff. And it's going to be including all these other players. So all of the hype comes together. Retail starts buying this thing, and we start to see not only the buyers stepping in that pushes the share price up because it has a very low float. So the float is relatively small. It only has like, I think 3 million outstanding shares or something like that. It's very small. So with that, plus the squeeze potential, so it got like a short squeeze. I don't think shorting was the biggest factor. I think it has more to do with just like hype and a lot of buyers stepping in. And then we started to see a lot of institutions buying, and we started to see a lot of options flow coming in. So it was very, very fun to have witnessed, right? And then what happened is with all of this excitement, it's getting all the attention, all the headlines. We're seeing this on the Motley Fool and etc. Now, one thing that's worth noting though is even though this thing is continuing to skyrocket, you want to be careful because we saw institutions buying this thing early on during this consolidation phase we got many months ago, and they're just riding this thing up, right? They're riding this up. Maybe we saw some profit taking at 1,000. So interesting to see. But the valuation, which is a price to earnings multiple of 58, puts it a little bit above the consideration for value investors. So it might be a little bit overvalued in the eyes of a lot of investors, but overall, I just want to note fundamentally it still has a good backing, and there's definitely more potential for it to squeeze. So is this thing going to run again? What is my view of the charts? Let me be honest with everyone. So when a stock runs and runs and runs and runs, no stock is going to run forever. When there's a massive move to the upside, eventually a stock will come back down. Okay, that's one thing you have to know. Now, you could apply this to many different stocks out there, but typically and almost all the time that is going to pan out and it's going to happen nonetheless. So with Super Micro, this thing ran and ran and ran like crazy, but now it started to give back some of its gains because of profits taking and other factors like that. And we probably saw a lot of these like whales that started selling up here once we hit this 1,000 mark. So it came back down all the way back down to 800, and now we're going to be watching to see if this bases. Will I buy this? I can't give financial advice, but the answer is right now, no. I don't see myself buying long term into this yet, or it really depends on different factors. I mean, fundamentally, it's there. It looks pretty strong. But the reason I wouldn't buy in quite yet is I have to wait and see if this would base. I don't know if this is basing yet because it essentially sold off for the entire day on Friday. So the question is, will we reject off 835? This is the previous support becoming resistance. And do we lose 800? If we do lose 800, we have support now at very close to 750 that could be tested. So I don't know if it's going to base at 800 and try to rebound, or if it comes a little bit lower, all the way down to about 750, and then it tries to bounce. See, I don't know that yet. So I'm going to wait and see on Monday if I were to play this. That's what I would essentially do. And then when it comes to buying it, okay, I'm not going to buy this like I buy Apple or Tesla or something else that not only has a big fundamental backing, but has, I would say, more security, if anything. So I'm not going to buy this like the way I buy Tesla. I'm going to be honest with you. I could use some money on the side to buy this. Yes, I could, but I wouldn't buy it at the current value yet. I'd have to see where it bases. I'd have to like watch the chart a lot more. But what could I do with this? And this is what I really wanted to call out because there's a difference between buying a company long term based off its long term fundamentals and other factors. And there's a difference between that and then buying a company just for fun or trying to like play it, make money off of it. And I see this as a stock you can make money off of, but to do so, you're not going to be holding it long term. You could also make a lot of money long term, but that's going to be a different story. But let me explain. So, when this thing ran up, right, you easily could have bought this thing and made money as it went up. But as it pumped, you're not going to want to be just essentially just holding on to it for too long. You want to exit your position. So when stocks have these runs, they're typically not just going to run once and they're done with. There's going to be another run coming. I see this as a stock that I could scalp. I get in, I get out, I could even swing it, get in, get out quickly. And that's what I'm going to typically do if I were to play this, right? You want to secure those profits. It's always important to do that because if you had bought in at 750 to 800 when we got this breakout and you had held this whole time, you would have lost a lot of those gains because you could see it gap down pretty big and then it ended up just dropping. So that's why you want to take profits quickly if you were to play this, and that's one strategy that could be used very, very well. You get in, get out quickly. That's one thing you could do. Secondly, if you want to buy this long term, I mean, you could do that, but I wouldn't necessarily do it just like that. I'd wait and see where this thing bases. It is trying to retrace a bit, and this could be the excuse me, this could be the start of a little downtrend for now. So it could drop a little bit more. I'll be watching to see where this bases, but then I think it's going to run again. So another question is, will this thing have more squeezes? The answer is yes. I think it's going to run again in the future but I'm not going to worry about the squeeze yet. I'm not going to worry about it going back up to 900,000 or even breaking 1,000 yet. I want to see where it bases first. Okay, we'll see if it stops at 800 or 750. We'll just have to wait and see. So with that being said, what's the best strategy? I'm going to wait before I buy long term if I were to do that. This is not a typical stock I would buy long term. I don't typically buy stocks like this long term. And then on top of that, if I were to play this, I would scalp it, get in, get out fast. It's going to run again, most likely. Yes, I do see more momentum for it with all the hype. So we're going to get more runs. But that's like a really good strategy. Why is this relevant to Tesla? Because this could be used as an exercise when you're going to be watching for a stock to kind of base. And then when you get those squeeze moves, you could get in and get out fast. Well, you could do the same thing with something like Tesla, but it doesn't have to be exact. So for Tesla, I do a mix of both of these, if I'm going to be honest with everyone. Sometimes what I do to Tesla is I'm constantly buying the stock, of course, right? Especially these dips, I've been buying them. But look at how volatile Tesla is, right? With all these swings, you could have gone long right here off this breakout. Once it actually got this nice bounce and got back above 180, you could have gone long here, kept it, gone long, and once we got this rejection, set a stop, raise your stop loss, and exit your position. And then as it dropped, reaching its support, you could have shorted Tesla if you wanted to short it. You could have. My point is, you can also scalp Tesla in a very, very simple, similar way, or you could just swing trade it. I'm kind of referring to swing trades right now. You could do the same kind of things to Tesla. You easily could have gone long here when we were talking about an explosive move coming to the markets easily. So looking at like super micro and other plays like that, you could use it as an exercise. Imagine you're playing super micro, you go long, it pushes, you take profits just to get out quickly. With Tesla, that's what I do sometimes. So I'm constantly buying shares as a long-term investor. So I have a bunch of Tesla shares on the side. But then on another portfolio, I'm also trading Tesla on the side. So you can make money both ways. And that's kind of like what my strategy is. So if you're a person that wants to like scalp or day trade or swing, playing like super micro could be a very good exercise for when you want to like scalp Tesla, trade Tesla, get into swings and get into like long-term bets. Things like that could work very, very well, right? And I just think that it's a very good opportunity and something that you could take advantage of. So, what is my view of Tesla? I'm a long-term investor, a long-term buyer, and I would buy a lot more Tesla than something like super micro based off fundamentals and such. I think that super micro has strong fundamentals, but Teslas are still stronger. It's my honest opinion. It's the truth. And then for swinging, or kind of like day trading, I mean, I could trade both of them, right? You can make money both ways, right? I am a lot more used to playing Tesla, and I do tend to play that more. Also, Spy and like others, and I can even transition to futures. But for now, I just want to make it clear. Uh, this could be a very big opportunity, a very good learning experience if you want to like get better at trading Tesla, be working on your disciplinary practices, such as being patient and waiting for a stock to base. Well, this is your opportunity. You could watch this on the sidelines, check it out every so often, and see if you want to like enter a trade or not. That is your choice. But this is just a good opportunity, a good exercise, and I think good money could be made off of this. All right. So, in summary, I think Tesla is a stronger buy than this, of course. Long term is what I'm referring to. Could I buy SMCI long term? I still could, but I need to see where it bases at. I need to see a lot more things about it. I could just like use some money I have on the side to use for it. Is something else I'd consider, but I don't really see myself as passionate as I am for like Tesla when it comes to buying long term. But for both Tesla and Supermicro, you could swing trade them, you could scalp them, you could do all sorts of things with them. You could also, continue to just even swing like shares and stuff. You could do all sorts of things. So you could play them the same way in a sense. You could play them very similarly and then use this as an exercise for Tesla. That's the connection between them. And that's how I see this as a trader. So, that being said, I want to thank every single one of you so much for listening. Have an absolutely spectacular day. Don't forget that the market's going to be closed on Monday. So, we're going to have a lot more videos like this coming out. And I just want the best for everyone. So, I thank you all so much for listening. I'll see you guys very soon on the next one. Have a great weekend and peace out.